Today we're going to dive deep, really deep, into one of the most talked about corners in the market, the Nasdaq 100.
Always fascinating.
Right. And our mission today is to kind of dissect its technical status. We see this, undeniable bullish momentum.
Absolutely. It's been powerful.
But there are also these subtle counter signals showing up, things that maybe warrant a closer look.
Intriguing signals, yeah. Little warnings, perhaps.
Exactly. So think of this as your shortcut to understanding the key technical indicators and what they might really be signaling right now. We want to get beyond just the headlines.
And the way we do that, the best way really, is using multi-time frame analysis, looking at the monthly, the weekly, and the daily charts.
Right. It gives you different perspectives.
It really does. It gives you a layered understanding. It's not just, identifying a trend, but synthesizing a whole picture of market sentiment, what the institutions are doing, and where things might be headed. It helps you understand why certain signals matter, not just what's happening right now. It's about connecting those dots across the time frames.
Okay, so let's unpack this then. Starting big picture, the monthly time frame. What's the long-term view telling us?
Well, from that highest vantage point, the Nasdaq 100 is still clearly in a strong bullish phase.
Yeah, you see those higher highs, higher lows. Textbook stuff.
Textbook uptrend, exactly.
Okay.
And right now it's trading around 23,762. But the context is important
Let's
too.
see it with the context.
What's really insightful here is the long-term structure. The index has been moving inside this rising wedge pattern.
Oh.
And this goes way back to December 2018.
Wow, that long.
Yeah. And it's been respecting both the upper and lower lines of that wedge pretty meticulously. It suggests a very, disciplined, though maybe stretched upward path.
Okay.
Plus, it's consistently stayed above the 21 exponential moving average, the 21 EMA, on that monthly chart.
Which is generally seen as a positive sign, right? Keeps the bulls happy.
Definitely. For a lot of big players, that 21 EMA is a key gauge of trend health. Staying above it signals some deep-seated confidence.
Right. So that all sounds incredibly bullish, like a market just powering ahead.
Yeah.
But you mentioned subtle warnings earlier. Is this where one pops up?
This is exactly where the first, let's call it a wrinkle, appears. It makes you question things a bit.
Right.
Despite these new highs, this impressive price action, the monthly RSI, the relative strength index, is showing clear bearish divergence.
Divergence. Explain that again quickly for everyone.
Sure. So bearish divergence happens when the price pushes to a new high, but the RSI indicator doesn't confirm it. It makes a lower high, or maybe just fails to make a new high itself.
The price goes up, but the momentum indicator doesn't follow.
Precisely. It's like the engine isn't revving quite as high, even though the car's going faster. It suggests the underlying buying pressure, the fuel for the rally might be weakening. It hints at potential exhaustion, or at least a slowdown. It's not saying crash imminent, but it's definitely a whisper from the market that maybe this rally isn't quite as healthy as it looks on the surface. Makes you ask, is the momentum sustainable?
That's a really important point.
Yeah.
Okay, so that's the big picture, the monthly view. Let's zoom in a bit to the weekly time frame. You mentioned April of this year was significant. Around 17,000.
Yeah, April 2025 was absolutely pivotal. The index came down and tested a really important demand zone right around that big psychological number, 17,000.
It bounced.
It bounced hard, but what really stood out was the volume. We saw a weekly candle with ultra-high volume form right at that level.
Which tells you.
That's not just retail folks jumping in.
Right.
Ultra-high volume at key support usually signals strong institutional buying. Big money stepping in, defending that level, and basically saying, okay, the uptrend resumes.
Right, putting their weight behind it.
Exactly. And that conviction that institutional buying is what really fueled the next leg up into June. That's when we saw the index break, and crucially, close above its previous all-time high of 22,200.
Major breakout.
A major breakout, yeah. And just like the monthly, the weekly chart also shows the price staying consistently above its 21 EMA. More confirmation of that trend health.
Okay, so powerful confirmation on the weekly too. Institutions are in, new highs achieved. But let me guess, that warning signal.
You guessed it. That same nagging issue we saw on the monthly chart, it's right here on the weekly too. The RSI is still showing bearish divergence.
Wow. So on both the long-term and medium-term charts.
Yes. And seeing it across multiple time frames like this, it really amplifies the signal. It's not just a one-off fluke.
So it makes that straightforward bullish story a bit more complicated.
It definitely does. It reinforces this idea that while the price looks strong on the outside, the underlying momentum, the engine, isn't quite keeping pace. Think of it like seeing small cracks appear on different floors of a building.
Okay, not catastrophic maybe, but definitely something you need to investigate.
Exactly. It suggests the market's internal strength might not be as solid as the price chart suggests. Again, it doesn't automatically mean sell everything tomorrow,
Right.
but it absolutely suggests caution. It should make you, the listener, think about the quality of this rally. Maybe tighten up risk management, consider protective strategies, even if you're still generally bullish.
That's a great way to put it, focusing on the quality of the move.
Yeah.
Okay, so we have the monthly and weekly context. Let's get down to the daily time frame now. What's the immediate picture? What are the key levels we need to watch right now?
All right, the daily gives us that granular view for, the next few days or weeks. What we see currently is the price moving inside what's called an ascending broadening wedge pattern.
What does that typically mean?
Well, these patterns can sometimes signal increasing volatility, maybe some distribution happening near the top of a trend, but importantly, the price is still holding above its daily 21 EMA.
So short-term bullish bias is still intact.
For now, yes. But this pattern, combined with the divergences we've seen, it sets up two main potential scenarios, each with really critical price levels to watch.
Okay, let's hear them. What's the bullish case?
All right, bullish scenario. If this upward momentum keeps going, the first hurdle is that big psychological number, 24,000.
Round numbers often act as resistance.
They often do. People take profits, some might short there. If it breaks decisively above 24,000, then the next potential target could be up around 24,500. That might line up with the top of that broadening wedge pattern.
Okay, so watch 24,000, then possibly 24,500 on the upside.
Correct. But also watch for signs of stalling around 24,500 if it gets there.
Got it. And the flip side, the bearish scenario.
The bearish scenario hinges on a key support level, 22,800. If the price breaks down and closes below 22,800, that would be a pretty significant warning sign on the daily chart.
Suggesting the immediate uptrend is failing.
Potentially, yes. A break like that could quickly lead to a move down to retest a gap in the chart near 22,000.
Gaps often act like magnets, pulling price back.
They certainly can. A move towards 22,000 would definitely force a rethink of any short-term long positions and likely trigger some stop losses. So those levels, 24K, 24.5K on the upside, and 22.8K, then 22K on the downside, they're really critical near-term markers.
So understanding these specific thresholds, it's not about predicting, is it? It's more about being prepared for how the market might react.
Exactly that. It's about having a roadmap, not a crystal ball. It helps you, the investor, anticipate potential reactions. You can define your risk better, plan your entries, your exits, maybe consider hedges if certain levels break.
Right. Like if 22,800 breaks, you're already thinking about 22,000, not just reacting in the moment.
Precisely. It allows for more strategic, less emotional decision-making. You have a framework to navigate the market's inevitable swings.
Okay, let's try and synthesize all this. We've looked across the monthly, weekly, and daily charts, and the recurring theme seems to be this tension, right? You got this undeniably strong, powerful, bullish trend.
Clear as day on the price charts.
But running alongside it consistently on multiple time frames, you have this bearish divergence in the RSI. That was like the market's giving mixed signals.
It is. And our goal here isn't to give you a simple buy or sell. It's about highlighting this complexity.
Right.
These divergences, they're like early warnings. They suggest that even in the strongest trends, you absolutely have to pay attention to the underlying momentum, the health of the move.
It challenges that simple trend is your friend idea, doesn't it?
It adds nuance to it. It encourages critical thinking. Is this rally sustainable? What's the real strength here? These conflicting signals actually give you a richer, more complete picture than just looking at price alone.
Seeing the forest and the trees.
Exactly. It helps you anticipate potential shifts in the market's character, not just react after the fact.
No.
That's the real value of digging into these layers.
That was incredibly insightful. A fantastic deep dive into the Nasdaq 100's technicals. So as we wrap up, here's something for you, our listener, to think about. When you see a market showing such obvious strength, how do you personally weigh these kinds of subtle but persistent warnings like bearish divergence? What does that make you consider about how long a rally like this can really last?
And just remember, the power of looking at multiple time frames, it gives you that crucial perspective. It helps you see the big picture and the immediate details, allowing you to be more prepared and adaptable whatever the market throws your way.
Absolutely. Well, if you found this deep dive valuable, we'd really appreciate it if you'd subscribe to our YouTube channel, Investor's Edge. And please do hit that like button. It really helps us bring you more content like this. Until next time, stay curious and keep learning.